As gold prices rose in 2019, demand trends may come as a surprise to investors. So where do these trends point to us next? Joining me today is Juan Carlos Artigas. He's the Director of Investment Research over at the World Gold Council. Juan Carlos, good to have you back in studio.
Thank you so much for having me.
On the day that the WGC has released their latest demand trends for gold. So excited to go over some of the key points and criteria you highlighted. Let's start with gold demand. The World Gold Council highlighting that it fell 1% in 2019, but it was offset by what we were seeing on the ETF side. So can you explain what was happening here?
Absolutely. So last year, what we consider identifiable demand, in particular, bar and coin demand, gold-backed ETF demand, jewelry demand, and technology demand, as well as central bank demand, all of that combined decreased by 1% relative to 2018. Now, at the same time, of course, there's still demand for gold happening in the over-the-counter market, and some of that can be seen as a proxy on activities in exchanges like COMEX, right? And you saw COMEX net longs increased last year, right? But when we talk about the demand for gold in our report, we're talking about this segment of identifiable demand. And as you said, consumer demand was generally softer, but it was offset by strong inflows on ETFs.
On the consumer side, we saw a decrease in jewelry consumption and demand, mostly due to the higher price of gold.
Exactly, a combination of higher prices, especially in local terms. The gold price in rupee and in various other currencies reached record highs. The price also moved fast, which tends to deter consumers. And then finally, perspectives of potential weaker economic growth may have influenced this perspective.
But it's interesting because we saw, I just had the Perth Mint on that had record sales in 2019. So while jewelry demand may have taken a hit, investors were still buying, well, at least from the Perth Mint, coins, bars.
Right, and absolutely, that's one of the really interesting aspects about gold is the dual nature that coexists.
Right.
You have a consumer side that is linked to jewelry, technology, but there's also the investment side. And oftentimes, these two parts of gold are not necessarily moving in the same direction. Oftentimes, they may go in opposite direction. And when the price of gold increases substantially, that can actually be something interesting and appealing for some investors, and therefore that can create investment demand in particular.
Central bank buying. This is a trend that has continued, continues to be robust, that we're seeing, new central banks step in buying gold or, existing central banks adding to their holdings. It's the 10th consecutive year of growth here. Do you forecast this trend to continue?
We definitely expect central banks to continue to be net buyers, for the foreseeable future. 2018 was a record year, 50-year record. 2019 was just slightly below. So 2019 was still really strong. And to your point, there was a wide range of central banks coming in and buying gold. So it's not a trend that is going away anytime soon. We may not necessarily see the same amount of buying because it has been really, really strong over the past couple of years, but we definitely continue to see positive buying.
What do you think was fueling that, Juan Carlos? Is it this fear of a global crisis meltdown, or why do you feel that the central banks are adding to their reserves at this time?
Well, to your point, the trend has been for about 10 years. So I think that is more awareness of the role that gold can play in foreign reserves. Central banks often cite safety and diversification as reasons why they invest in gold. And in some sense, gold is an asset that can protect, their reserves over the long term.
But you would think that investors or retail investors would be watching what the central banks are doing and perhaps mimicking this move and saying, well, if they're buying, perhaps I should be buying. Does this go back to your point about the dual nature of gold, or do you think that will see more?
Well, again, there are different ways in which investors can access gold. Again, another way to understand that, many investors, institutional and retail investors, are buying gold is through gold-backed ETFs. I mean, gold-backed ETFs last year reached record highs in terms of the amount of gold held. right? So, and it's not only, it's no longer just a US or North American phenomenon. By now, actually, European listed ETFs hold almost as much as North American ones.
WGC just launched a brand new tool in January. Oftentimes, investors have a hard time assessing or understanding the value of gold. So you've launched a free tool called Quorum. Tell us about it.
Absolutely. So as we were discussing before, gold has a dual nature. And sometimes that confuses investors that are looking at the market. Oftentimes, investors or market participants focus on the short term, and from that perspective, looking at gold solely from an investment point of view may be sufficient to understand short-term performance. But once you start to try to understand the performance of gold over the course of a year, 5 years, 20 years, and understand how this interacts, you need something more robust. So we developed a methodology, what we call the gold valuation framework, which is a methodology that helps investors understand how the performance of gold is related to demand and supply dynamics, and in particular, capturing this dual nature. And for that, not only we developed this methodology, this theoretical methodology, we also created a web-based tool that helps investors see how different macroeconomic environments may influence gold performance.
And what kind of led to the development of that? Was it, were investors asking for this, or what made you think, hey, this would be a great tool?
Yeah, one of the roles that we play in the market is to help investors better understand the role that gold can play in portfolios and how the gold market behaves, how it moves, and basically remove any potential barriers for investors to feel comfortable investing in gold.
Right. Because do you feel there's still a lot of misinformation out there? People just don't understand gold?
Yeah, I think that the bulk of investors that we speak to and through market research and so on and so forth suggest that they are not necessarily aware so much, right? So the point is that gold is a relevant asset, it's a mainstream asset, it's a large asset, but it's still relative to all assets a small percentage, right? So not everybody's paying attention to it. Once you bring it up, they're like, oh, this is interesting, and they look into it. So what we're trying to provide is all the tools so that they can appropriately look at gold just like they look at other asset classes.
Finally, need to bring up the coronavirus. Is it still too early to know the impact it may have on gold sales? Obviously, China has been traditionally one of the largest buyers of gold, China and India. Could this have any impact on sales?
It's early days. We need to understand what the impact on GDP may be. There are two competing aspects here. Number one, if there is a deceleration in GDP, that may have a negative effect on consumer demand. At the same time, if that is creating risk and risk concerns, that may influence positively investment demand using gold as a hedge against this risk. So again, it's early days to truly understand the impact, because there are going to be two competing trends here, and also not only how consumers and investors in China may behave, but around the world.
Juan Carlos Artigas, always a pleasure having you in studio. Thank you so much for coming.
Thank you so much for having me.
And thank you for watching. We'll have much more for you, so be sure to stay tuned to Kitco.com.